Welcome back now for our market analysis segment. Sandy Swadlamini, Treasury Dealer at Nedbank, joins me in studio. Very good afternoon to you, Nkosi. Thank you so much for coming through. We are seeing, or the reading of a government US shutdown. Can you just break it down for us? What is happening?
Thank you, Natsile. Good afternoon to you and good afternoon to your viewers at home. As you have rightfully mentioned, the U.S. government is currently shut down, and this is because of a lot of disagreements between the Democrats and the Republicans. And this comes after they have to pass a bill for funding their fiscus. And this bill have two major points that there are a bit of a disagreement between the two parties, which has to do with Obamacare, which is a way of subsidizing medical cover for the citizens in the U.S. and also cover even foreigners for medical assistance. And this is a big issue. As you know, Trump is very against people coming into the U.S. and now the fact that they are being covered in their medical. Yes, so he's very against that, and that's why currently, because the Democrats stand firm with their position, and hence there's currently the shutdown. But this is not the first time we are seeing this, especially with the Trump administration. In 2018, there was also a government shutdown. But we hope this one is going to not last long, even though Trump have come up this morning threatening that he will dismiss a lot of workers in government as a result of this shutdown. So we know that there are also effects that link to salaries, people not getting paid. In the army has been affected by this. So there's a lot of effect that we hope there will be reconciliation or agreements between the two parties. And there was also a vote today, because this happened yesterday, where some of the Congress people have changed their position since yesterday. Some are conceding, some changing to the opposite side, but there's still that's not being sorted.
Right. While we don't know how long it'll last, is it in any way affecting bonds or the movement of stocks? And as it is momentarily, what risks do you foresee this? You know, what risk do you anticipate that could come with this if prolonged, actually?
We are already seeing the risks flowing through, especially because there have already been conversations around the US dollar. So the US dollar has always been a safe haven. So if you are an investor, for the most part, you would rather hold US dollars because they're the reserve currency. They've been strong for a while. And the US, you sort of trust in terms of political stability, economic stability. So what we are seeing this year, which is a little bit different from the past, is that investors are now trying to move away from the US dollar as a reserve currency or as a safe haven for them. So you find that investors are currently looking to hold other currencies. The euro is going up, is sort of attracting more investors, and the Swiss franc. So these are now alternatives to the US dollar, which is currently pushing the dollar down. As of today, in the market, you can see that we have the dollar depreciating quite slightly, especially against rand. So we opened at 17.26, but at the moment we are at 17.18, and this is a trend that has been ongoing since the beginning of the month. So for the dollar, we are at 17.18. For euro, we are at 20.15, and for GBP, we are at 23.14. So it's also worth noting that even Europe and UK specifically, they're also facing their own challenges. Hence, you can see the trend. All the currencies are depreciating. So in the UK, they are facing challenges with their deficit. So they are currently having a deficit of 83.8 billion, and this is just from April to August. And having a deficit raises concerns, especially for the local people and companies specifically, because that means they might raise taxes in the future to sort of cover that deficit. So there are those worries around the population that if this deficit continues, taxes might increase. And in Europe, it's also the same thing. And Europe, there's a slight adjustment there because they are seeing a very sticky inflation. And this means this means that their inflation being sticky means that the real returns in terms of their yields are quite low at the moment. So investors, being investors, will try to move their funds somewhere else, weakening the euro at the moment.
While we stick with the US, you're going to give us the numbers for sure. Tech appears to be the new paradise. Nvidia just crossed 4.5 trillion US dollars in terms of market cap. What is the optimism intake right now?
So tech currently has been doing well, and it's also worth noting that it's been up around 30% since, if you collectively, since beginning of the year, which is a very good stride. And Nvidia continues to make history now and again. Now they have just crossed 4.5 billion in market cap, or 4.5 trillion in market cap, which is, it's the first company to achieve such a stride across Apple, Microsoft, which have enjoyed being the biggest company in the world. So now Nvidia is that company, actually, because there is a lot of demand for infrastructure for AI. So this tech boom is centered around AI. So there's a lot of developments that are happening in AI, and Nvidia being a cornerstone for that development in terms of them providing chips, and AMD. Both companies are currently up, and they are doing very well because of the demand in the AI chips. We are also seeing them invest a lot into other companies. We've seen the 100 billion investment to OpenAI. So they are inviting other companies in, and they're also assisting other companies by investing in those companies. So it's a really good thing for tech companies at the moment, and they are a bit of concerns, and this is not something negative towards the tech companies, but there are concerns of a bubble around tech companies. At the moment, they form 40% of the S&P 500. So having that in an index is worrisome, because an index is supposed to be stable. So if now 40% of the whole index is just tech companies, it means if something happens that negatively impacts tech companies, the whole index will fall. Like, it will go down. So there's conversations around the index being diversified enough, meaning it should probably include more companies that are not in the sector. So, but we'll see about those developments. But currently, we are seeing Nvidia up. We're also seeing Robinhood. It's above 12.25% this morning. So all the indices are up, actually. The FTSE index is also doing so well, even though we are also seeing a lot of possibility of a rate cut in the UK. And just to highlight something on the FTSE, and this will also fall in for the JSE All Share. In the UK, we have this company called Fresnillo, which is a mining company. It's currently up 33% just for the month of September, and this is a very significant rise. And it's a mining company exporting gold and silver. So these have assisted much in the rise of the FTSE and also the JSE All Share. So for the JSE All Share, definitely we have gold prices up, we have platinum prices up, we also have silver doing well. As a result, stock prices for companies like Anglo American, BHP, Sibanye Stillwater, and Harmony Gold, they have risen quite significantly, which impacts the JSE All Share. So these are definitely good news around the equities, even though we have the negative aspect from the US. And this has been surprising. It's just, it shows that the positive impact from the equities side have sort of contributed more compared to the negative news of the US government, because equities have continued to stride, even though the US news should have probably affected them negatively.
Okay. I'd like for us to get into commodities. I think closing off yesterday, we saw gold setting impressive price records, actually, and it did punch at least through to 3,800, above actually 3,800 US dollars an ounce. Why are investors rushing to bullion? I mean, clearly they can't get enough of gold.
Yes, so thank you for that question. And this has been a trend, actually, since Trump took since Trump took office,
Yeah.
because Trump comes with a lot of uncertainty in terms of his policies,
Yes.
one, and also in his delivery. And you also have that aspect where you can't predict his next moves. So a lot of investors would like to know or at least predict what's coming so that they can sort of cover themselves and do sort of all sorts of hedges. So what we are seeing in this era is that there's a lot of uncertainty, and in times of uncertainty, people like to hold gold as a safe haven, and these have been actually the trend even for central banks. We have seen central banks trying to stockpile a lot of gold. So I think in recent times we have also seen the South Africa and actually Swaziland holding a lot of reserve currency in terms of like trying to build their reserves. But this comes from uncertainty in the market, which means people are now going to try to hold a lot of gold, and they are going to try to hold reserve currencies. As I've explained earlier, unfortunately, the reserve currency is now not stable. It's not the US. Usually, it would be the United States dollar, but currently, definitely there is a lot of demand for gold. As you can see, it's up 0.20% and at the moment, and it's also worth highlighting that even countries have been trying to stockpile gold. We have China, India, Turkey, which have already amassed over 900 tons of gold. So there's still that rush for gold as things become a little bit unstable and uncertain. And another factor, and this affects specifically the Eurozone and America, we are seeing a lot, we are seeing sticky inflation in that zone, which means real returns, because if you are making a return in an investment, you want portion of it should cover inflation, but the remainder, we call that the real return for that investment. So the real return is now lower because Europe is cutting interest rates, and the US, we have seen it cut interest rates before by 25 basis points. So the reduction in interest while the inflation is remaining sticky means that investors are not getting as much as they would like to by investing in Europe or the US. So this also supports the fact that investors are now moving to SA and Malaysia, by these countries being emerging economies and also showing a little bit of stability. South Africa have its problems, but the GNU, it's still intact. There are problems, but it's still moving forward collectively.
Right, Sandiswa, thank you very much for your insights. That was Sandiswa Dlamini, Treasury Dealer at Nedbank, helping us make sense of what's making the day's trade. This has been Nedbank Business Watch. We do hope that you'll stay tuned next week as we fill you in on all that's making moves in terms of trade and all other business-related news. Otherwise, from myself and the team, thank you so much for your time. Until next time, take care.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.